Okay.
Welcome to Markets Now. I'm Michelle Rook along with John Wenzel with StoneX Group, and we are seeing some pressure in the energy sector today, but we have had a pretty good run here in the crude oil market, have we not, John?
Yeah, one of the things we've been through, a slide since all the way and had intermittent lows in March, May, and June, but with the Fed potentially pausing rates, we've seen some investor participation come back. But I think the real marker, the change in prices from $69 in June to recently 84, we're back to 80, has been OPEC has really put in some hard cuts in July, August, and now they've extended to September. And so I think that's made the market tighter fundamentally, but it's also gave investors that just go out and buy futures a little bit more of a reason to go out and bid up the oil markets a little bit. We're kind of at a spot where I don't know if they'll go further. We've seen a little pause in that activity recently.
Yeah, and I don't know if that's just profit taking because we got on the upper end of that trading range, or is that some of these China economic concerns that we keep hearing about throwing some doubt here into some of the investor trader minds?
Definitely, we're seeing headlines of the China PMIs being soft in different numbers. They have really soft inflation, and they pulled the unemployment data for this month. They were supposed to release that today, but they didn't, and it probably isn't good. That's why. With that, on the flip side, though, there was a news story out that you're not going to see on the headlines as much, but China's refinery runs in July were very high, over 2 million barrels a day more than last year. Their crude oil imports are very high. They're setting new records. So, and Asia as a whole has very high demand right now. So I'm a little bit way the PMI and activity data is maybe kind of a lull in it. If for some reason, if they pick up into the fall, they could have some strong demand numbers. They already do. So.
Yeah, definitely. And of course, we keep hearing about how global demand is going to be very high this year versus the last couple of years when we came out of COVID. When we look at inventory overall, it looks like we have seen a lot of, especially the refineries pump back up here, back to pretty close to COVID levels, right? Or pre-COVID.
Yep, refinery runs are nice and strong. I had hoped that there's some new refinery additions. We've got Cenovus has 2 refineries back online. One's that's still ramping up a little bit in Superior, Wisconsin, but in Ohio they've got one up going well. And then ExxonMobil had a large expansion. So we had hoped that we wouldn't get a last year, like when we were talking about a diesel shortage. My guess is we're not going to be there this winter. This fall, shall I say? But unfortunately, it appears European markets, global markets might at least push us somewhat in that direction. They have. We've already seen $1 a gallon jump since the lows.
Yeah, let's talk about diesel fuel prices. Like you said, they've taken a big jump here. So you say some of that is to blame on the European situation, but also air traffic has picked up, you said?
Yeah, one of the things that even us that are watching all these numbers, you kind of miss the fact, even though they've talked about it last year and into this year, that air traffic is going to jet fuel demand is going to be an increase in the U.S. It's actually been a pretty big number, more so the last 2 months. And what that does is it forces refineries to run a little less diesel. Diesel has kind of been in a slump, and I would blame that largely. Not only on crude oil's decline, but the transportation sector is down 2 or 3% when you look at number of shipments. There's just goods aren't moving across the U.S. at the same rate. And so that's made diesel demand slack. And it's only recently that we've seen jet fuel demand kind of come in there and kick it back higher. To get to where we are today, though, it really has been the last couple of weeks, we've seen a lot of global bidding because European diesel stocks are really behind what they need to be year to date. So,
yeah, and with inventory dropping, what does that mean for fall harvest in terms of the agricultural community, John?
Well, I think we're still going to have a really good supply. And when you look at the Midwest, Mideast, as where Chicago, Illinois, Indiana, some of those places, Ohio, they've actually kind of had a little bit of a diesel glut. So we've had really good prices, encourage people to stock up. And I think supply will be good there because they've been discounting quite a bit in that region. Just the refineries have been pumping out more than people can use. One of the disadvantages of being a Midwest refiner, they're Mideast, is you can't export extra stuff. In the Gulf of Mexico, all those big refiners, they can export, if they've got a little extra stuff. So the cheapest prices in the U.S. really have been, somebody who, anyone from Illinois to Ohio in that region. Not so much in the Midwest, but it's still been good prices. But last year's diesel shortage wasn't necessarily a shortage of U.S. capacity. If you remember, one of the things I threw out there was refineries make about 20% more diesel than we use in the U.S. It's just getting it to the right place at the right time. That was an issue last year. It could crop up again.
No doubt. Okay, so I want to go back and ask you just a little bit deeper dive on the China economic news that we've been hearing and global demand that they have for energy in general. Is it going to continue to tick up here, do you think?
I think so, and maybe I'm a little, the guys accuse me of being a little of a perma bull, but I don't think that's the case. We really got, for lack of a better term, from the EIA or just all these different agencies last year, there was a lot of fever around the war in Ukraine and causing stuff to bid up. All the while, demand in China was very weak. So that's China demand coming back is more of almost a normal course of things as they've opened up. But now we're kind of in a weird state where we don't trust the numbers. But we are seeing a lot of demand. And the same goes for jet traffic there. Jet fuel demand is going to be a large chunk of their increase. So I'm still a little bit worried about higher prices. And, I guess we always have to be careful. We don't want to rush in too fast when all of a sudden it starts going up. But it's definitely some worries about higher prices. If OPEC, I go back, why would OPEC, they've tightened the noose on this thing, why would they loosen it?
Definitely. And as long as we're talking about energy, obviously going into harvest, producers are looking at drying costs, and propane has actually gone the other direction, hasn't it?
Propane has been in a slump with crude oil as we went, for the last year. But now as crude oil has rallied, propane has not been able to do that. And one of the things, I think the primary thing is just we've got high levels of inventory all spring. U.S. propane production is a little bit higher than what we have demand for. Definitely in the U.S., over half the propane that the U.S. makes is being exported. And with new U.S. production coming online, it just doesn't seem that exports are going to be enough to really move the needle to clear out inventories. So it'll be interesting to see what happens as we go through the year. But I'm as much worried about normally we don't get lower propane prices and higher crude oil prices. Most of the time they go together, at least in some fashion or form.
Yeah. And in the meantime, what has natural gas done? Because it was down around $2 for quite a long time.
Well, natural gas production is kind of following the propane story. We've got, and it's not really the chicken or the egg there. It's usually, the dog is natural gas and the tail is propane, right? So with all this increased natural gas production, it's kind of keeping a lid on prices. It'll be interesting to see. There are a little bit of a shakeup going on, and we don't know the final news of it. But in Australia, they have some really big LNG plants there, and they're talking about a strike. And if that lasts for a while, that has kind of been something that's kicked up not only natural gas prices in the U.S., but also it did kick up diesel prices. It's kind of a knock on. But I think with the high U.S. production, and if there's a warm weather, it's going to be tough for natural gas to rally.
All right. Well, appreciate your insight as always. John Wenzel with StoneX.
Thanks, Michelle.
That's Markets Now.